बड़े बड़ी वॉइसेस 18 और स्वदेश पर लगातार बनी हुई है। मोमेंट्स नाउ 2-4 मिनट के अंदर अंदर शंकर शर्मा फर्स्ट ग्लोबल के बड़े दिग्गज हैं बाजार के, वो भी अपना व्यू हमें देना शुरू करेंगे। इनफैक्ट ईटी नाउ पे वो इस समय हमारे मैनेजिंग एडिटर निकुंज जालमिया के साथ बात कर रहे हैं। आइए सुनते हैं कि वो बाजार के करेक्शन को किस तरह से रीड कर रहे हैं।
Fed sort of changing its stance, or at least people say it's changing. I don't think it is. All those are just mere reasons to justify a correction, which was anyway overdue. And if you look at in particular India and Indian small and mid caps, I mean, they have been, I mean, just a remarkable run from the middle of last year. And that kind of thing simply just cannot keep going on month after month. You cannot make 5% returns every month on an aggregate portfolio. It's just not sustainable. You will and you should have months in which you're down 5 or 10%. And I think you've just seen that kind of month go past. I don't think it's the start of a bear market by any stretch. But, I think this correction was long overdue, and the reasons are coming in the form of this new virus or the Fed speak or whatever, else there might be.
Shankar, historically you've always maintained that there is nothing called, India unique story. It is all about global connection and global correlation. So if I draw to your attention to what is happening in other emerging markets, largely the Korean market, the Brazilian market, and where Hong Kong has moved, these markets are at a fresh low for 2021, and we are massively outperforming. So do you think other markets will catch up, or we will go down?
That's a very uncomfortable question. The fact of the matter is that the Koreas and Brazils of the world did very well last year. Our markets didn't do that well this year. So last year. So we were due anyway for a sharp outperformance. But the interesting thing, Nikunj, is that if you were to compare India to, let's say, a global benchmark like the MSCI World or ACWI index, on a long-term basis, there is no significant outperformance that India has had. It is only from February in particular this year that you've seen a big, sharp sort of breakout, relative performance relative to the global benchmarks. Otherwise, India has kind of traded in line with global markets, in particular the emerging market, for a fairly long period of time. I just think in context of, let's say, Brazilian market, India is far, far better. There is no question about it. The kind of companies we have here, the kind of depth of the market and the liquidity available. India is a standout emerging market. It's almost a developed market in terms of parameters on which you want to evaluate markets, which is diversity of companies, the amount of liquidity available, the kind of trading systems, the kind of regulation. I think India is strictly first world. It really doesn't belong on this lens to emerging markets. So I think India deserves to outperform. I think it will. But it is just going to take a breather for now because it has run up too fast and in very, very short span of time.
The panic around the new virus variant, is that genuine, or we should take it with not a pinch of salt but with a bag of salt, given that there are commercials involved by global medical companies here?
I am not an expert on this, Nikunj. All I can say is that I don't think you've seen the end of viruses. That has been my view. Even after the vaccine came out, in November last year, that the vaccine is out. It's probably going to solve the problem that we are encountering, but can it solve all future problems? Because I think the virus or the mutants of the viruses are just going to keep coming because this genie is out of the bottle. How it mutates itself, we have no idea. And the latest virus is a good case in point that we had the Delta variant, and we have had a few milestones along the way ever since the first outbreak, happened last year. So I think this is somewhat serious. I don't think it is end of the world. I think the world will figure out a way to solve this problem also. But it just gives markets a decent reason to correct it. Markets were looking for a reason to correct, and we have it right here.
Shankar, now that markets have corrected, now whether 10% is the right level or 15% is the right level, only in hindsight we can figure out. But we can certainly divide the market in three parts: buy, sell and hold. So why don't you do that for our viewers? Identify pockets which are a buy after the correction, stocks which still are a hold, which you don't want to sell because the future still looks bright, and sell stocks which are a decisive sell, whether it is because of valuations, earnings, or the change in dynamics?
I think the third category, maybe sell is a very harsh word, Nikunj, but definitely the third category are really the financials and the FMCGs, which have been the darling of markets and fund managers for last several years. That entire pack has been a total disaster in the last 15, 18 months. And for right reason, that those businesses, are fairly mature. They traded at crazy valuation. Banks were trading at very, very hefty price to books. And of course, FMCGs were trading at north of 40, 50 times earnings. We kind of kept believing they would continue to trade thus. But the reality is that expensive stocks, can undergo long periods when they deliver nothing, as Hindustan Levers and all these companies have had, multiple years in which they have delivered precisely zero returns. I think that is clearly the avoid basket. Now, in terms of the buy basket, every single thing that we like in small and mid, if you take mid-cap IT, nothing has changed at all. If anything, if any new virus, etc., appears, then let's hope this thing is just a mirage and doesn't cause any severe damage to life and businesses. IT remains a standout performer. Pharma might, obviously because of these problems, that's the sector you want to go and buy a bit of. That will get a fillip. But I don't think you will end up with a big lockdown, which will hurt the real businesses, the real economy businesses like, real estate or let's say consumption plays, liquor, spirits. Those are, I don't think, going to be, impacted massively. I think, but they have corrected, a few of them have corrected. I think this is a great time to go and buy them. So they are both buys and holds, and they avoid, like I said, the banks and the financials and the old line MNC and consumer discretionary companies. It's a pretty simple trade. I don't think really much has changed in the last 1.5 months' time.
So, Shankar, if you're optimistic about economy and the capex and the recovery, then why financials are an avoid? Because A, financials have underperformed, B, financials are the true proxy.
Yeah, I remember in 2007, it's exactly the same thing used to be said about infrastructure companies, right? That if India has to grow, infrastructure has to grow. Now we kind of keep forgetting what was talked about in the past, but the reality is that there is nothing called this. If this has to happen, then the other thing must happen. There is no such thing. So India may well become a country which is growing but doesn't require much bank credit. Who knows? And in any case, if we look at last several years, bank credit has not grown much. It's been consumer credit. Maybe India morphs itself into a different kind of economy. All I'm saying is that is a sector which, to my mind, is a highly cyclical sector. And in an upturn, the cycle, it doesn't necessarily mean that the upturn the benefits will flow through to these institutions, because in finance and fintech, there is a lot of disruption happening. We should not lose sight of that fact, that how the landscape for finance will change in the future, nobody can tell. But you can be pretty sure of one thing, that the banks will not be as dominant in the financial pie chart as they have been in the last 20, 30 years. And if you just take that broad thematic, you can see that maybe, just maybe, these valuations need to contract. Just as e-commerce will have contracted the valuations of FMCG companies, because in e-commerce, a shopper doesn't go to a shelf, right? He is shown advertising and he goes and clicks on the lowest price product. Unlike a retail shelf where a Hindustan Lever can buy premium space and at the eye level, those are the old economy models, but in the new economy model, things get disrupted. So I think fintech, in broad part, is a major threat for banks. And I think that's one of, if not the only reason, at least one of the major reasons to at least remain light on them.
So since financials account for nearly 35% weightage, if you feel banks and financials as a group, they are not headed anywhere in terms of market returns, so won't that cap the Nifty returns?
In a lot of senses, that has already capped the Nifty returns, hasn't it, Nikunj? That you, on the one hand, you have the consumer pack, you have the banks and financials, you have a stock like Reliance. I think all put together, maybe 60, 65% of the Nifty doesn't look as if it's going to be like a sprinter. It's more like a long distance runner at a slow pace, but not definitely a, Usain Bolt kind of, runner. Those runners belonged obviously to the mid and the small cap area, and that's exactly what the market has delivered you this year. There has been nothing which the mainline stocks have delivered, which is worth writing home about. But below that, it has been a completely different universe. So you're absolutely right. The Nifty returns will probably lag the overall, let's say, basket of equity, ownership returns, which means you have mid and small apart from just a few Nifty stocks. I think Nifty will lag the broader market for sure.
राइट, वो एक बहुत ही शानदार बात चल रही थी शंकर शर्मा और निकुंज डालमिया के बीच कि ऐसे बाजार में क्या करना चाहिए उन्हें और किस तरह से इस फॉल को एनालाइज कर रहे हैं। इनफैक्ट एफआईआईज काफ़ी ज़बरदस्त तरीके से सेलर्स बन गए हैं लास्ट कुछ दिनों में, हमने दिखाई है। हमारे साथ डिम्पी कालरा इस समय